Good day to one and all. This is Dr. Sivaraman of IKnowIndices.com. Hope I am audible to you. Let me display the PowerPoint presentation. Good day, Sandra. Thanks for confirming the audibility. Asian session live market analysis on February 27. Between 5 and 5:30 GMT, we will be reviewing the market using the live market code page. I will give the link for the same. Okay, I'll also focus the camera over that of the live market code page. Now currently Euro is trading around 1.3448, 1.3450, and the high was 1.3480, the low was 1.5444. You find the net change is 00. It is 501 GMT. Now in the case of GBP, 1.5867 and 1.5870 at the current levels. 1.5901 is the low high and 1.5862 is the low. 3 pips negative net change is seen. Nominal moves are happening now, and Euro is showing flat condition. GBP is showing 3 pips negative net change, and USDN is also showing negative net change of 10 pips. Currently trading around 81.10, 81.11, 81.67 as the high, and 80.99 as the low. And you find the contrarian moves are happening when USDN is making a small dip, GBP is also making a small dip, and CHF is also making a small dip from that of Friday close. And CHF is currently trading around 89.57, 89.60, 89.62 is the high, 89.38 is the low. All you come across a narrow range swing happening during that of the Japanese session. Coming to that of the commodity pairs, USD CAD is trading around 1.0006, 1.0009, 1.0011 is the high, 0.9978 is the low, 12 pips positive net change is seen. And Australian dollar is showing negative net change, 1.0687, 1.0689 at the current level, 1.0716 is the high, 1.0659 is the low, and 8 pips negative net change is seen. So the commodity pairs, USD CAD and Australian dollar, are showing USD gaining moves. But when compared to that of the majors, they are showing mixed moves. Euro is showing flat net change, and USDN and USD GBP, USD are showing negative net change, and also CHF is showing negative net change. When CHF shows negative net change, it is USD weakening move, and GBP shows negative net change, it is USD gaining move. So you find the mixed move happening in the case of majors, but the commodity pairs are showing already the USD gaining move. You know that they lead the rally and lag behind. On Friday, you would have noticed that they went up and then stopped gaining the levels, but Euro and GBP gained the levels for the day, for the weekend, and now they are holding the gained levels. And along with that, you would have noticed that USDN also gained, and that is the typical contrarian move. Because of that, Euro Yen, which is trading around 97, 98 area, which has come to 109, a phenomenal rise. They have done it by doing this sort of move. And in the case of GBPN, again, the GBPN, they have just gained it to 128 from that of 120 area. So they made a very quick gains in the case of yen crosses by making a contrarian move, and now they are just pulling it a little bit, and they wanted to make a downward dip in order to induce the long holders to book profit, and then subsequently they are expected to gain the levels in the case of USD. Now I'll go back to that of the PowerPoint presentation. So in the market, we try to understand what period we are, and on an intraday trade, we just note down the initial low and the high around the 3:30 GMT, the 4 majors and 2 commodity pairs, and use them as the reference levels throughout the day, identify the type and the sequence of moves they could do it. And on Friday, you would have noticed that they continue to gain the levels slowly during that of the European and US session as the intentional move. Followed by that of the intentional move will be the extended move. So extended move could be on the opposite side of the intentional move. It could be on the downside. Then that is what you come across. Slowly we are trying to make the dip in the market. And followed by that, they have to do the session close, uh, the volatile moves or the stop ins or the false move. And again session start, they have to do another false move or the stop end. And then later on, try to do the intentional move. So that is how they are expected to make the moves. So when they are making the extended move on the downside, we have to wait necessarily for our 2 hours and try to see that the new low has not been breached for more than 2 hours. Then we can try to take the buy positions. So once you decide with regard to what sort of trades we can do, still to limit the risk, we need to keep the hedging order to limit the risk to 30 pips. And once the position makes profit, keep stop at entry and remove the hedging order so that we don't incur any loss while doing trading. So once we take a decision of that nature, then we try to equally concentrate and maximize the profit. It is not the risk aversion alone or averting the risk alone is going to benefit us. We have to earn from that of the market. To earn from that of the market, we have to use the trailing stop and keep the limit opposite to that of the level in which we are taking the position. So suppose we are taking a buy position near the high, we'll try to exit. If we are taking a sell position near the high, we'll try to exit near that of the buy position. That is the initial understanding. Then subsequently, when the going is good, we try to trail the stop and also move the limit away from that of the market, understanding the limitations of the players. They can gain or drop about 150 pips in a given day. So try to keep the limit about 150 pips net change level on the higher side for a buy and on the lower side for the sell position, and try to maximize the profit by using a trailing stop. It can be a trailing stop of 15 pips or 30 pips depending upon the equity and depending upon how long you wanted to hold the trade. Then you can just reap the benefit from that of the market. So whatever be the type of analysis you try to do it in the market using various type of technical analysis or fundamental analysis or other varied analysis, still trading strategies are very essential in order to sustain in the market and consistently earn. And also you would have noticed that during session start time, during session close time, they make very quick moves, and such quick moves are trading opportunities for us. So if you get afraid of the volatility in the market, it is extremely difficult for us to enter into the market. It is something like, let the waves subside, then I'll go and take bath in the sea, that sort of situation. So the waves are continue to be there. The volatility is part of the market. So we have to perceive such volatility as the trading opportunities, and understanding the limitations of the players, understanding how much they can gain or how much they can drop, and why they wanted to gain, why they wanted to drop. This sort of understanding, if we develop it, then we will be able to really participate during such quick moves in the market. Now, the initial lows and the highs set around 3:30 GMT. So Euro formed the low 1.3444 and that is not been breached, and 1.3480 is the high which is also not breached. And in the case of GBP, 5862 is the low and 5901 is the high, and that is also not breached. But even though the market is making small swing between the low and the high. And in the case of yen, 1899 is the low not breached and 8167 is the high. Market is staying closer to that of the low. And in the case of CHF, 8938 is the low and 8962 is the high. That is also, there also you come across as not being breached. In Canadian dollar, 0.9978, which is not breached, and the high was 1.0011, that is also not breached, but market is closer to that of the high. In the case of Australian dollar, 1.0659 is the low, 1.0716 is the high. There again, it is not been breached. So, which indicates that the traders' participation in the market on a Monday morning is relatively less, so the players have not breached the low or the high. And only when the traders participate in the market, then the players need to make moves in the market in order to earn money from that of the traders. But if the traders are not participating, then invariably they try to keep the market cool and just make small swings of 1 or 2 pips that may not give any trading opportunity. Whenever they make such consolidation, you just watch the market. Don't enter into the market in a hurry and don't think that it is a precious level to buy and be possessive of such levels. Later on, they may show lower level also for a buy. So don't have any sentimental attachment to any currency pairs and try to understand that they are tradable. So when they are tradable, obviously you will buy and exit out of such positions. So you should have the mindset to sell it back to that of the market. And if you become possessive of it, you don't feel like liquidating it, then comes the biggest problem of holding it for a long time. Then as far as the forecast is concerned, this is the week. You come across the month and gets over, that is, today is 27th of February, 27th, 28th and 29th of February fall in this particular week. Then 1st and 2nd of March also seen in this particular week. So invariably when a week wherein the month gets over and the new month starts, we normally notice a very high volatile moves in the market. Suddenly they might be showing the market appearing very calm and suddenly they make either way with some moves. So there is no question of USD gaining move, USD weakening move and things like that. They can suddenly make the contrarian move on the upside or a contrarian move on the downside or make USD gaining move in all pairs using simple flimsy excuses, and then they can make USD weakening move alternatively. So be prepared for such big moves in the market. And for that, the only thing is use the hedging order if you want to participate. If you have got very limited usable margin, don't participate during this particular type of week wherein the month-end trend reversal happens. So if you have very less equity and you have got that mindset to trade with stop or without stop, then it is risky. With stop, frequently they may hit your stop, and without stop, they may attract margin call. So avoid taking positions during such weeks. If your equity is very, very small, I'm not just demoralizing it, I'm just cautioning those who are having very less equity and they have to forcibly take one mini lot, still it might be about 5 to 10% of their equity. Then it is very risky. If you are having adequate equity, then this gives enormous trading opportunity, swing trade opportunity this week, and try to do either way trades and use the hedging order in case if you are struck with a long position and then the market continues to drop in a big way, then use the hedging order to book profit on the downside and take another buy position and try to book profit when they are making very quick upwards move. So that sort of averaging trade on the buy side and that using the hedging to book profit on the sell side, that can be done during this particular week. And if you don't have the hedging facility, then the next alternative is averaging trading. Average every 100 pips of drop in case if they are making a drop. Suppose you have got a buy around 1.34, if they suddenly drop it to 1.33, then without any stop, then try to take another buy 1 mini lot. And in case if they go to 1.32, then take another 1 mini lot. Then if they rise and show profit, in that book 100 pips profit on the buy side. So that way, either way moves. If they drop more, you will buy. If they rise more, you book profit. That sort of approach can also be done. But sell and buy trade can do it during this time, but you have to quickly exit out of the positions after keeping stop at entry, because suddenly they may just take the market to the higher trading zone. Shift in trading zone happens during this sort of trend reversal time. So keep that also in mind. Sometimes they make one-sided rise during this month-end trend reversal time and then start doing the volatile moves during second week and continue to rise the market. So it all depends upon when exactly the traders are committing positions. So on a daily basis, on live market, we'll try to analyze it, understand what they intend to do. Whatever be the hidden agenda, they have to disclose it in the market. And the first disclosure will be the false move. So if they want to rise quickly, the market, they will dip about 20, 30 pips or 50 pips quickly using some trigger and stop cutting the low and start reversing it in a matter of about 5-10 minutes and come to that of the earlier level from where they started their drop. And that indicates that they wanted to make a very quick upward move. So follow that and try to read them properly using the live market quote page so that you will have the market reactions, live market reactions before you, and that will help you to take very good trading decisions. Let me minimize the PowerPoint presentation and focus the camera over the live market quote page. I'll try to take up the questions which are asked here. Then Srini asked a question. The Euro USD today, will there be any trend reversal move happening today? Yeah, there could be a drop, but they are expected to make less drop and more rise type of moves. So whenever there is a quick drop, you try to buy it. And they will make a quick drop in such a way as if it is going to fall endlessly. That is how they will try to create it and reverse it. So understand that and try to trade accordingly. When they are stagnant like this, closer to low, closer to high, just avoid because the spread is very, very narrow in most of the cases. As I explained, the expected market move, they are expected to slide towards close of Japanese session, and they are expected to slide again during the US session. So keep that in mind and try to trade accordingly. And Jack, after noting the initial low and the high of the four major commodity pairs, do you trade the currency pairs individually or do you compare the movement of all the six currency pairs? At any given time, I study all the six currency pairs and try to see what sort of moves they are doing it. Not only in the currency in which I am interested. Suppose I am interested in Euro, trying to buy near the low, I just watch how exactly the other currencies are doing, showing either a contrarian move or the USD gaining move, USD weakening move. Then I also go to that of the respective crosses, Euro Yen. Are they closer to low or are they closer to high? And what they are trying to do it, and Euro CHF, Euro GBP. So if they are just doing a contrarian move, for example, making a dip in the case of Euro, making a dip in the case of GBP, but Euro is 3 pips negative net change, GBP is 6 pips negative net change. As a result, Euro GBP is gaining about 1 pip. And so they probably wanted to gain some more levels in the case of Euro GBP before making a drop. So in such a scenario, I identify that they just wanted to hold GBP and gain a little more in the case of Euro. So only then Euro GBP will go up. Then I'll try to buy in case of Euro, in Euro and try to book about 20-30 pips profit after that. Then when GBP is making a dip before making a rise, I'll try to buy. Then it will also gain the levels to reverse Euro GBP. At that time Euro they will hold and GBP they will try to rise it. So identify the type of moves, what they intend to do it in the case of the four majors, two commodity pairs and the respective crosses. One or two crosses if you study, then it is enough for you to understand how exactly they intend to make the moves. And Shadir, will there be a false move to the downside in Euro? Yeah, they are expected to make volatile moves, not necessarily a false move. They will try to suddenly drop Euro and say that profit booking, and suddenly rise Euro and just induce short covering. Either way, they are expected to do that today, this week. See, always keep in mind the market may look very, very strong, and people may say that Euro is having enough strength, it is not going to fall, it is going to rise and try to buy. And all turn long, they have to drop and hit their stops before making further rise. So let the traders commit the positions, and then the quick moves will commence in the market. Then understand what the players are trying to do it. When they are holding it, then don't enter into the market. If the original buy is making 100 pips loss and the hedging position is making 70 pips profit, okay, it's a scenario. So you are taking a buy and afterwards you are taking a buy and kept a hedging order. The hedging order is filled. The market has come down about 100 pips from that other buy. So the hedging will be making 70 pips profit. Would you recommend to take profit or wait for the market to reach the stop at entry and continue the origin? There are two scenarios. You can either keep stop at entry if you are not able to read the market moves properly, so that let them drop even 200, 300 pips, you are not worried. And then when they start rising, your stop at entry will be closed and you keep another hedging order below that, 30 pips below, and trail it upward to the initial hedge level. Then once the market goes above your buy level, you keep stop at entry and then try to book profit. You continue your trading. That is one scenario. The other scenario is you continue to read the market moves, whether they are making an intentional move or an extended move. If they are making an extended move, they have dropped about 70, 75 pips. Afterwards, stop cutting the low for 2 hours. After 2 hours, then they are not breaching it. In the next session also, the new low, book profit there and keep another hedging order below and try to trail it upward. And they are expected to make the intentional move afterwards. First of all, the swing, then followed by that intentional move. Swing is from the low to the high. Then shabby. Your focus shows slide move on end of Japanese session followed by swing move on European session. Does it mean that extended downward move start from end of Japanese session and continue till end of European session? No. The focus says that Euro and GBP are expected to make the slide during the Japanese session, swing and slide, then swing and rise during European session, and then swing and slide during US session. So it is either way swings. Above that of the high, below that of the low, that set of moves are expected to happen. They will try to hit the stops above around 1.35 area, and they will try to hit the stops around 1.34 area. That sort of either way stop or the potencies. Then round. Will Euro reach 1.32 levels? So it is a trend reversal time. Nothing can be ruled out, and they may if they want, but it is unlikely according to my understanding. They may come below that of 1.34, and sometimes you come across the non-trading zones during this trend reversal times. And if they hold above 1.33 during this week, then 1.32 to 1.33 becomes the non-trading zone. They continue to go up to 1.35, 36, etc. They revisit 1.32, then they may go to further down also. Then shabby. You see Euro Yen will come to 106, 107 level. In the case of Yen crosses, making about 200, 300 move is not a difficult task. But only thing is now they are making a contrarian move. Dip in the case of Euro, dip in the case of USD Yen, dip in the case of GBP. And suddenly they will reverse USD Yen and go up from that of the late Japanese session. At that time, they will try to show the USD gaining move. They already CHF, they have brought it to 0.0. And Canadian dollar already showing positive net change. And the commodity pairs indicate before what they intend to do. So they are expected to make the USD gaining move. And in that process, they are expected to gain the levels in the case of USD Yen. And if they dip in the case of Euro and GBP, it will have a very less impact in the case of Euro Yen and GBP Yen. Keep that in mind. So, normally in the case of Yen and Yen crosses, it is extremely difficult to do either way trades. It is better to wait for any dip or stop runs below that of the low and try to buy, or closer to low, try to buy. because they already made the spread. Now see 81.67 to 81 area, so about 68 pips. So you would have noticed many of the occasions I have been telling you that the spread is about 10 pips, 8 pips, 5 pips and things like that. When compared to Euro and GBP, you find more spread in the case of USD yen. So they wanted to take it upward. So avoid doing sell and buy trade in any of them, either yen or yen crosses. Yeah, I will display the initial low and the high. How much equity you recommend for a loss trade? Now, 1 to 2% of your equity can be exposed for taking positions. And there are different platforms. Some platforms even offer 1:400 as the leverage. And normal thing is 1:200. That is $500 for taking one standard lot position. If it is 1:100, then they may take $1,000 for taking one lot position. And if it is 1:50, like the US trading platform, they may take $2,000 for taking one lot size position. So it depends. But ultimately, see that you don't expose more than 2% of your equity for taking one standard lot or one mini lot. So you can calculate how much of equity you require from there. So minimum $10,000 to $20,000 are essential in order to be a successful trader in the market. And if you try to deposit only $2,000, $3,000 and try to take one mini lot, it might think that you are able to trade. But most of the time you will be spending your time, most of the occasions you will be spending your time in risk aversion rather than earning process. Because we all come to the market to earn money. And for that, the less fear condition is very important. But when the usable margin is getting eroded, suppose you have got $500 and it becomes $400, you come across nearly 20% of your usable margin is reduced. So that will give great stress on you. Whereas when you have about $50,000 and market drops about 50 pips and only $500, relatively, which is a lesser proposition compared to the usable margin, you know comfortably that there is not going to be a margin call. So obviously you will be able to hold the position or take calmly the decisions. Whether you can do an averaging trade or you can just close the position, and you can take a lot of decisions based on that market move. But when the usable margin is less, then you are forced to take the remedial measures very, very quickly. Then that may lead to distress trading. Then Jack, when you say monthly trend reversal, do you mean that the March will see the euro dipping downwards? No, it is not that trend reversal means the opposite of what has happened in February has to happen. Trend reversal time is they are expected to create uncertainty with regard to the trend. So they are expected to make upward move as if they are continuing the trend and suddenly drop. And the traders will think that now their resistance is, support is being breached and market could just fall down further. That is how they will create that impression and then continue the rise. So trend reversal doesn't mean the opposite of the previous month has to happen. They are expected to make the volatile moves and confuse with regard to what is going to be the trend of the market. Then set the trend from second week of March. Then you will know. But the way in which they are doing the downward stop and will indicate that how much they wanted to rise. If you are smart enough, we will be able to estimate it. Then Zebra, what is going on with the GBP yen? Still upward potential? Yes, still upward potential is seen in GBP yen. Don't try to short it. If there is a dip, try to buy. Then Sabi, is contrarian move always short-lived? Yeah, contrarian moves are limited to that of the mid-session. And also during uncertain times, when the people are waiting for the data release, etc., they will try to do the contrarian moves. and they will not continuously make contrarian move. Then everybody will say that no, US data has got no impact or European data has got no impact, because when US data is supposed to have an impact, then either it should be making USD gaining move or USD weakening move. Instead, if they continue to do the contrarian move, nobody will trust. So they have to change and make the market appear as if it is really reacting to the data. Then Jason. Well, USD CHF has got good up move to 91 level. USD yen is expected to gain considerably the levels, and around 90, 89, 50 and things like that. They are all good buy opportunity in position trade. This week we should be able to see that it goes to 93, 94 area very fast. You may use simply some data from the rest of Switzerland and then try to gain the levels. Then Tim, what about Australian dollar? Long term, I explained Australian dollar can come up to 1.08 and 1.06. In that range is expected to swing. Probably a brief of 50 pips above 1.08 and a brief dip below that of 1.06. They are the scenarios in this month and next month. Not much of a gain could be seen in the case of Australian dollar. After a drop, you can buy so that you will get about 200 pips. Then GBP and the Euro. GBP and the Euro, they are expected to make volatile moves. They are not expected to show the trend this particular week. And so quickly they may go above that of the high and hit the stops, and quickly go below that of the low and hit the stops. So the psychological level 1.35 and 1.34, they will try to hit the stops on either side. Then DDPT. Is more drop than rise expected of Australian dollar today. Is Aussie expected to visit 1.05? Yeah, Aussie could go to 1.06 again and a brief downward stop into 1.0550, and that is a great buy opportunity in that. Then FX and market moves, I will show it. The video. It may not necessarily be monthly reversal, but what may be called as a retracement. Okay, fine. Fibonacci figures. If platform giving 1, if platform give 1.500 means that for one lot, how much need? 1:500 is a very, very great leverage and is highly risk leverage. Don't think that when the platform is offering more leverage and they are good and they are encouraging you to take more positions, but they are encouraging you to do over trading. Please keep it in mind. And even if the leverage is very high, try to take only one mini lot. Don't go with that of the leverage. And see, the main reason NFA reduced the leverage is because most of the traders, when they see usable margin is still available in that account, they continue to average and continue to take more positions. That leads to more of over trading. And when the market drops from there or a rise against that person for about 50 to 100 pips, the margin call comes in. So don't be happy with a leverage of 1:500. 1:100, 1:200 are ideal. But still, you have to take very less position, book profit, then only think of another trade. If you discipline yourself, the platform providers cannot harm you. Otherwise, they are ready to grab your money. Then TDP. If Euro expected to visit 1.33 today, yeah, they could go below that of 1.34, most probably or likely during that of the Euro session. I'll go back to that of the PowerPoint presentation. So the initial low and the high, they are not breached in the case of Euro, not in the case of GBP, and Yen also they are not breached it. CHF also they are not breached. That shows that market is really lackluster. And Canadian dollar also, they are not breached. Normally they indicate in the case of the commodity price, but still they are not shown it. That shows that volume is relatively very less now. Australian dollar also not breached the low of the high. So in such a scenario, please wait for them to bring in the momentum in the market, then try to enter into the market. If they drop quickly, you buy, and if they rise quickly, you book profit. That's what the buy and sell trade can be done. Avoid doing sell and buy trade. Suddenly they may just spike up the market for any data release and things like that, and don't get caught unaware. So it is a trend reversal time, but still less drop and more rise moves are expected. So whenever there is a drop of 50 pips or 60 pips and when they stop cutting the low for more than 30 minutes, try to enter there. Then book profit when they quickly rise and don't hold it as a position trade. So trend reversal times are not good for position trade. If you try to keep stop at entry and aim to do trend reversal, aim to do position trade, they may come and hit your stop, the entry. Then you are holding that position for a long time, so it becomes wasted. That is why I am suggesting that you book profit when they quickly rise, and they will give another opportunity of buy again during the drop. And they are expected to create a lot of uncertainty in the market by making drop, making rise and things like that. Every second the market sentiment could be changed from session to session or things like that, day to day. So understand that they induce such things in our market. As such, in our normal life, you will not come across any change. But the players do it specifically to earn aggressively from the other traders. So I take this opportunity to thank FX Trade and also you people who have come here to listen to my webinar. Tomorrow again I will come and review the market for you, and on a daily basis we will review and understand how they are trying to do the current time, and cautiously take positions and trade and keep stop at entry once the position makes profit so that you can avoid any sort of loss in the market. So thank you one and all. See you tomorrow.